Good afternoon, guys. This is Connor from Zenfinex. Welcome back to some more March monthly analysis. This time it's for the silver market, which is shaping up for a really nice impulsive move. We've been edging upwards as expected, but there could be a bigger move looming if it can break some key resistance levels. Now I'm going to be giving my opinion on where we could see this commodity heading in March and tying this in with the fundamentals to give us that added confluence on the chart. So to kick us off on the fundamentals, I want to highlight a distinct difference between the futures market and physical silver at the moment. Now physical silver is really hard to get, it's really hard to access, and the markup is actually quite staggering after I've done some research. Rounds of silver have been seen to be sold for around $40. Now when you compare that to the $28 we see on the chart at the moment, there's a clear disconnect between futures and physical, and this could mean we see a nice spike in our silver charts. Now, I've also mentioned before about industrial demand. This is increasing. Silver continues to be a key component for industrial models such as your mobile phones. The idea of more fiscal stimulus fuels this idea quite a lot, and this is another confluence to add to these silver bulls at the moment. So we're shaping up for some nice upside. Now we also finally have the US dollar, and if you watched my Euro USD video published on Tuesday, you will know my opinion on the dollar. In short, the Fed's stance remains the same. They will continue to use their full range of tools. They will downplay inflation, and so we're going to see some more downside for the dollar for sure. The key support levels did not hold very well for the DAX either, and this is going to continue to help us in our bid to buy in this commodity. So now we've established our bias, which is bullish. We can now look for more opportunities to take positions on the chart. We want to get the best chances for profit with minimal drawdown as always, so check out these charts. Okay, so I'm looking at the chart now, and let's try and find some nice targets for March. And the first thing I notice if I scroll out is this 28 level has provided nice resistance on more than one occasion. We've had it there, around roughly here, and even over the last couple of days we saw this bearish candle on the 23rd of February, just 2 days ago. So it's really important that we break above this 28 level, and then we can there'll be nothing stopping price going up to 30. Now another thing I wanted to notice, if I zoom back in on the chart, is volatility has decreased since this was the attempt to the social media buying frenzy from the Reddit forums. This was their attempt of it, and we had this huge spike to the upside, resistance at 30, and then we had this natural pullback as price was dumped. Now we've had price creeping back up, and my targets for March would be definitely, if I just mark it, this 30 level as our daily take profit level. If we can break above 30, then we're going to have some really nice upside up to around $50 per ounce, I think. But $30 will provide really significant support. This is resistance. This is major resistance. So if we can break above there, then we're laughing. So for me, target for March is $30 per ounce. Take it one step at a time. Now, if I move down onto the 4-hour chart, and I'll get rid of these drawings to save confusion, you can see that we're on a whole, since this market noise from the Reddit forums, we're in a nice ascending channel, right? And I'm expecting price to actually respect this ascending channel. And if I draw our trend line roughly on our ascending channel, you can see our target roughly for the next coming hours or days around 28.5 as one of our profit levels. And I'm expecting price just to really edge up to the upside and respect this ascending channel. Now if I add on to the 50-day moving average as well, we can see price as a whole respecting this 50-day moving average, and we've had these really nice rejections from it as well, which is a sign that we can continue to push higher. Now let's try and look at some, and if I just quickly check the daily as well, we're actually trading quite nicely away from the 50-day moving average. Some nice wicks here as well, more bullish signs for me personally. And if I look onto the 1 hour chart, and I'll zoom right in so we can get a real feel of the market structure. So where would I be looking to buy from on the 1 hour? So what we've had is we've had a break of structure, and I'll mark that break of structure for you now. Market structure, this was the high that was broken, as you can see. We've since retraced back and we're looking to push even higher. Now a real discount level for me would be here, sitting at around 27.6 as our 1 hour order block. If price could run into this level, then for me this would act as a really nice level for us to push to the upside. Now if we don't quite reach that level, and I'm hesitant that we will, then what I'm looking for next is, if I delete this to save confusion, is I'm looking at this 28 level again, and if I draw in the recent market structure high, which is here, if we can see price break above that, then I'm looking for price to then retrace down into our 1 hour order block, which coincides really nicely with the 50-day moving average. So this would be our new 1 hour order block. I'll be looking for price to retrace down into this level, and then a push to the upside to break towards our 30 level. And it makes sense that this may happen, especially as 28 has seen as resistance. And if I zoom in, maybe just go right down onto the 5-minute chart, and we can really try and refine these levels. Now if you see all this noise here, this has all kind of been mitigated, and the only time we really look like we've broken any structure, or there was a real impulsive move potentially from institutional investors, would have been from this order block here, and this is our 5-minute order block. And the structure that I'm mentioning is this high here, which was broken to the upside. Price did retrace, but it hasn't. This is left untested. Now what this would turn into then is our order block entry. If you wanted to have a risk entry, you could buy straight off of this order block. And if I was aiming for those 30 levels, or let's say for example those 28 levels first as our TP1, we're looking at around 11R. If we can go to 30, wow. If you did hold, I would say, obviously it's up to you what you do with your trades, but I'll definitely be taking some profits along the way. We're looking at around a 65R trade. So some really nice opportunities here. It's about being patient, not buying straight away, because we're at the top of the structure at the moment and we're likely to see a pullback. Any questions on this video, guys, feel free to drop a comment. You can message me on my Instagram shown on the screen above me. I'm always happy to help, always happy to listen to other people's opinions. Other than that, likes are really appreciated. Shares, if you subscribe to this channel, then it means you won't miss out on all of this great value that we send out every week. I'm personally doing 2 videos a week on this channel. Other than that, guys, thank you very much, and I'll catch you all for the next video.